Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after Friday and Monday's whipsaw price action, the Australian dollar has slowly settled down and finding support around 68.45.55 area, seen as a key level. In light of the oversold condition, I feel the market should rebound and therefore look back towards the region of somewhere around 69.5 cents and reassess from there. We've got an inverted hammer when it comes to the euro, and that is with the market sold off closer towards that support area, seen around 103.2040. The market has found somewhat renewed demand from the inverted hammer, could see a potential upside challenge, and therefore look towards the region at this present stage of 104.65 and reassess from there. Market's still a little bit nervous ahead of the US Federal Reserve rate decision, with a 50 basis point rate hike expected. The dollar yen, since posting a somewhat tri-star doji, just that is, the market is taking the challenge higher, breaking through the 135 area. I'm still holding a neutral bias, as I feel the market is still somewhat overbought and very much holding long positions since this rally, and therefore I do expect soon to see a significant downturn, but not presently. Sterling took the challenge lower and now crushes through the level, which is at 120.70, and now revealing the next level at 119.35 to 45 and reassess from there. As the bears continue to weigh on this market, you can see that little demand at present ahead of the Bank of England's rate decision this Thursday, with a 25 or 50 basis point rate hike expected. Sterling Kiwi on the market is still a little bit softer and still looking towards that bottom side of the range, seen roughly around 191 as we yo-yo in a 191 to 196 band, and the bears are still holding to a potential challenge into today's session. Gold was weaker overnight, and now as it heads lower, now looks towards the key level of 1,788.94. I do anticipate the market may stage a bullish recovery from there due to this recent hammer that was posted back in early May. Failing that, we have to reassess the downside view, but at present, let's see if the market can hold as it displays a weaker price action overnight. Looking at oil, well, the market at this stage is holding above that key level, which is seen at 115.40.55. I feel that in light of the current heavy technicals, that we could see a break of this level, and if so, may potentially put a downside target roughly around the region of 109.70.90 and reassess from there. This is where we saw the rejection back in late May and may find demand from there. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.